I hope everyone's been well through these interesting times. And if you are in New South Wales, sort of Brisbane areas, I hope you're not getting affected by the floods. And if you are, you're probably not on this webcast. You're probably going to be watching the recording in a week or two. But yeah, so we've got quite a bit happening at the moment, don't we, around the world, guys, between obviously fears around inflation and interest rates, as well as what's going on in Russia and Ukraine, crazy weather, so much happening out there. So many things to be nervous about on the markets, and we're seeing quite a bit of volatility this year compared to what we saw last. So it's been a bit of an interesting trading period. But with volatility, the great thing for us is there's plenty to trade. Okay, and some of the tools that we use, like options and mini warrants and those types of things, they're very adaptable strategies and a lot of different things we can choose from to trade different market conditions. So this volatility over the last few weeks has actually been pretty good. And I'm going to show you guys today some of the trades that we have been trading over this period. All right, so what are we? We're 101. Let's get stuck into it, guys. Now, just a quick heads up. There's a Q&A box inside your software there. Do not hesitate to use that through this session, guys. Please ask as many questions as you want, right? This is going to give you the best value out of this session and your time attending this session, as well as if you ask questions, I almost guarantee you other people will be thinking those questions as well and will be hesitating to ask. So yeah, just ask a million questions, guys. If there's a particular stock you want me to have a look through, please do so. Okay, so part of this session, I will be going through the live market, and in that, I'm going to show and demonstrate the rules and some of the concepts that Caro taught you last week in the first part of this two-part webcast. Show you how to apply that to the live market, find a trade, and go to a point where we're building a strategy and applying our risk management. Okay, so this is a follow-on from last week's webcast. Sorry. So if you haven't watched part one, I do urge you to go watch the recording of that. You can find that on our website and on our YouTube channel. If you still can't find it, guys, don't hesitate just to email one of us or touch base. Okay, you can easily email us at advisors@tradercircle.com.au. We'll send you a link to that recording. So yeah, if you get a little bit lost through this webcast, guys, because you've missed part one, okay, if you haven't seen part one yet, otherwise I will be showing you some of those concepts that Caro taught you last week. All right, so before I get started, just a little bit about who we are. And there's two main brands behind us, and one is Trader Circle, and that's that's a company you're hearing from right now. And there's Emerald Financial. Now, Trader Circle's been around for 17 odd years, right? So we've been around a long time. And we're still doing the same as what we did 17 years ago, and that is education. Okay, this business was born out of the need of people wanting to learn how to trade. Okay, so we've been running courses for the last 17 years. The courses have changed a little bit over the years. The rules that we teach in our courses have changed and have been adapted over the years, but fundamentally it's the same. Okay, and our approach to this is that it's all about support. We're traders ourselves. There's a group of us, about 6 or 7 on the desk, that are always looking at the market, trading ourselves and showing other people how to trade. Okay, so we are traders here looking to support other people that want to become traders, or existing traders out there that just want someone to lean on or someone that they can chat to on a daily basis, right? And that's what Trader Circle is really about. And it's more shorter term style of trading, day trading up to a couple of days, a couple of weeks, or even a couple of months, right? Where Emerald Financial is a little bit different. So Emerald Financial was created by the advisors of Trader Circle, and that's more for the investing side of things. So if you're looking to build a portfolio of stocks that you're going to sit on for a longer period of time, that's the brand you want to lean on. Okay, so we've got a research portal that we've designed to help people save time in researching stocks. That's more aimed for the longer term style of trading. We do recommendations and all that sort of stuff as well to help people build a active portfolio. So that's who we are, guys. We're all about markets. We all of us on the desk both trade short term. We put our trading caps on, and there's a set of rules and a certain set of methodology that we use there. And then also we all invest, and that is a different methodology again. And Caro covered that last week. He spoke about, technical analysis being more useful for traders and shorter term sort of strategies, and then fundamental analysis being a lot more useful for that longer term style of investing. Okay. And that's the key difference between the two businesses. Okay, so before I go any further, don't forget that any advice contained within this presentation is general only, so it is tailored to your particular circumstances, and you need to decide for yourself whether it's appropriate to you. Okay, so you would have remembered this from last week, the foundations of a successful trader, okay? And that is trading rules, all right? If you go at the market in a haphazard way without any consistent approach, you're going to find yourself losing money over time. You might have some short-term success depending on what the market's doing, but in the long run, you will get hammered. I've seen this time and time again from undisciplined people coming in, doing our courses and not following our rules. The moment they start diverting out of doing a consistent approach and following rules is the moment that they get themselves on a path of losing. Okay. If you stick to a set of rules, whether it's our rules, anyone else's rules, I don't care whose rules they are, if they're a proven set of rules that work over a period of time, that's where you're going to get yourself to. If you want to be serious about this, guys, if you want to become a part-time or full-time trader, you are going to need some rules to follow. You can't just go at this haphazardly, okay? Yes, you might have a good period of time when the market's just purely trending up, which has been happening since the end of COVID, right? Yes, there was a good period of time there where the market just went up and up and up, and it was a no-brainer, right? We all did very, very well over those periods. But there's times where the market goes sideways, it goes down, it trends down for a period of time, it whips around in a volatile way like it is right now. There's times where you have reporting seasons where stocks can move 10, 15, 20% in a day, right? This is all stuff that you need to learn. There's a lot more to learn out there, guys, than you think, okay? And it's not that hard to learn, by the way, right? It's just experience, and that's what we do. We teach you our experience. And what we do is to keep you guys as safe as possible is bring everything down into a very clear set of rules, okay, that encompass what you've got in front of you here. And the first element of those rules is picking direction, okay? So you can't make money out of the market without picking the direction more times right than wrong, okay? That is just reality, right? You don't have to be right all the time, but you're going to be right more times than not. Okay, over a period of time. That's what makes a good trader. Okay, so picking direction is very, very important. Okay, the next element is once you have an idea of direction or a view, then you've got to pick a strategy, right? And that strategy could be, buying stock. It could be something a bit more leveraged, like a derivative. As Caro mentioned last week, it could be crypto. It could be, currency. It could be, commodities markets. It could be whatever you want it to be, right? As a strategy. Then risk management comes into play, right? So this is not gambling, guys. We don't jump into a strategy and just let it go to 100% win or 100% loss, right? We're not going red or black here, okay? We've got control to close out whenever we want, okay? Now, we teach you rules on when to close. We set up our risk management before we even get the trade out, okay? Or even put the trade in the market. We know our exit points before we get in. Right? And that's the big part of the rules here. Okay, so what does rules do? It keeps you disciplined. I mentioned that before, right? That's the number one thing with trading, guys. You've got to stay disciplined to your rules. Okay, you need a consistent approach and you need to stick to that consistent approach. It reduces stress, believe it or not. Okay, trading haphazardly is very stressful, and that tends to lead people down a path of losing more money. When you get to that point where you're extremely stressed out, you cannot think straight. Okay. So if you've got a set of rules that you're leaning on, that you trust, that you understand is going to work over the long run, then that reduces the stress dramatically. Okay. Now, if you've got a strong attachment to money, this is even more important for you because your stress is going to be a lot higher. Okay. So we all have different attachments to money. Okay, some people aren't afraid of risking money. Other people are, right? And the rules will significantly help you reduce that stress. It will simplify decisions, guys. If you're working full time and you want to take this on, you only got half an hour to an hour a day to trade, right? I know this because that's where I started, guys. Okay. I started as you know, was it 10, 11 years ago? I was running two fast food outlets, okay, one in Melbourne Central, one in South Melbourne. And I decided to come along and do one of Trader Circle's courses. Then basically I started trading, started enjoying it so much. Carlo, one of the founders of Trader Circle, invited me across to become one of the trainers. I took it up, sold off the shops, and now I'm running the trading desk. Okay. So, you know, back then I had half an hour a day to trade and I fit it into a half an hour block. And that's because there was a simple set of rules to follow. All I had to do was follow the rules, set up the strategy, call the advisor, get the advisor to help me out, get the trade into the market, and away we go. Right. So rules also is going to simplify decisions and save you a hell of a lot of time. Right. The approach is logical and tested, right? These rules have been around for a long time, guys, right? Carlo has been working and using these rules for 30 years on, right? These aren't new rules. They've been around a long time, all right? And it alleviates the emotion, right? It gets rid of the emotion out of the decision making. You just need to follow the rules. It's that simple, right? It is just so much of a more stress-free, simple way of trading. All right, so we break the rules down into three elements, right? Picking direction. Now, how do we do that? I'm going to go through that on the live market in a moment, okay? And what we're going to do there is we're going to focus on charting mainly, right? And that's technical analysis. So we're going to look at trends, counter trends, support, resistance. We want to look at technical patterns, okay, and indicators and things like that. Now, we can't teach you all of this. We can't teach you every element of what are in our rules, right? On a webcast. It's just not going to happen, right? That's what our courses are for. You need to be taken through a journey. You're going to be taught the theoretical and also the practical, right? You got to get out there and practice it. You'll have your own personal trainer that's going to help you and tell you whether you're drawing your lines wrong or right and that sort of thing. Okay, so there's a process you need to go through to learn how to pick direction. Okay, the next element of our rules is strategy and markets. Okay, so all right, you got a view, right? It's technical based. What are you going to trade? Okay, you're just going to trade stock straight up. Okay, if you want to be a short-term trader, guys, you got to have a big trading bank if you're going to trade stock directly. Okay, because obviously you're going to be waiting for maybe a 10 to 20% movement in a stock. Sometimes that can come quickly. Sometimes you might be waiting quite some time, right? Unless you've got 100 grand to put on it, then you can only need a couple of percent. You know what I mean? So if you've got a small trading bank, you're going to start looking at things called derivatives or leveraged products. Okay. And that's a term, if you haven't heard of yet, you can go Google it. That's, derivatives, all derivatives are leveraged to some point or another. Some are leveraged more than others. Okay. The products that we focus on here are mini warrants and options, but our picking direction rules work on anything. Okay. They're technical rules. You can use that in commodities markets. Now, mini warrants allow you to trade various different markets. Okay. You can trade currency, you can trade commodities, you can trade futures, you can trade stocks. Okay. And then there's options. Now, options give you a variety of different types of strategies. So mini warrants, you can make money from upward movement or downward movement. That's quite simple, right? So if you think the stock's going to go up or down, you can easily just do a mini warrant, okay? If you think the stock's going to go up, you can just buy the stock directly if you want to. Options are a little bit different, right? Options give you various different strategies. So not only can you trade bullish or bearish, but you can make money from sideways movement. So if the market's whipping around in a range, okay, between a support and resistance, you can make money out of that. There's ways of building strategies using options to do that. There's portfolio strategies, so you can hedge your stock portfolio. There's ways of building extra yield in your portfolio by selling options over the stock you own. Okay, and obviously you can use it to get as leveraged, or you got the choice of how leveraged you want to be, right? Depending on the strategies, All right. The good thing about our courses and what we do with options here, guys, is we can break this down to simplify it for you, right? So you don't actually have to fully understand what options are, how to price an option. You don't have to learn all the Greeks and all that sort of stuff if you've ever heard of that. What we do, guys, is we give you a strategy cookbook. We give you rules that will lead you towards either a bullish trade that's directional sideways or directional to sideways. So we've got different styles of strategies. So we have rules that will lead you to that. There's a full system here, guys, from start to finish. You go through it from 1 to 2 to 3 to 4 to 5 down to, I don't know, there's probably like 10 questions or something like that you've got to get through. And that's going to lead you to a certain strategy style. Okay. And that's why we've got this breakdown of all the strategies and the different styles. Once you understand what style you're doing, then it's going to go into how you set the trade up. It's going to show you exactly what strikes to pick, how to do it, step 1, step 2, and then how do you do your risk management. So how do you calculate your risk versus reward? We're going to, teach you all that, but not only are we going to teach you it, we're going to give you a cookbook where you get to go away and actually look at this and have step-by-step instructions how to apply it. Not only will you have that, but you'll actually have a personal trainer that's going to be able to help you go through this process again and again and again and again until you understand it and you can go out there and apply it yourself. So what I'm going to do today is I'm going to show you, we're going to go through the market. I'm going to use the set of rules to try and find some trades. I'm also going to show you some of the trades we've done recently. Now, while we're on the subject of options, I'm going to show you our most recent options trade that we've done, and that's on IAG, the insurance company here in Australia. We did this trade on the 28th of Feb, so it wasn't very long ago at all, a couple of days ago. So basically, we've done what they call a bear put spread. Don't worry about the name. None of you guys are going to know that yet. You haven't, unless you've traded options before. Okay, that's irrelevant at this stage. But basically, we suggested a risk of around $3,000 on this trade. Okay, that's the main thing here. Now, why did we get into this trade? Because there's technical reasons, and then also, why would we want to go bearish or short IAG at the moment, guys? Well, with all the floods starting to come through Brisbane and they're pushing in towards the borders of New South Wales there, well, that's going to have a negative influence on the insurance companies. Okay, so there's also a fundamental reason why we believe that this stock's going to keep falling. Now you can see the technicals here. So let's run through some of these technicals of why we've done this. Okay, you can see the stock's in a bit of a downtrend right now. We've got lower peaks and lower troughs. Okay, the stock's tried to come up and create a new uptrend, but has now failed. Okay, it's broken through the most recent trough and now starting to look bearish again. You've got a typical bearish signal here. Our indicators are pointing down. So you can see the momentum was sharply up, heavily overbought, and now we've got a bearish signal. Okay, so the technicals are starting to line up there for a bearish trade, right? The momentum shifted. We've got a stock that's heavily overbought in the short term. It's now broken back down through that counter trend line. I'm not sure how deeply Caro went into patterns, but this is what we call a pennant pattern. And it's broken that pennant pattern to the downside. And usually when that happens, you get further downward movement. So that's where our analysis started, right? So we've established we want to do a bearish trade, okay? Now, the market's been fairly whippy of recent, so we decided to do a bearish trade that also profits from time decay in the options. Now, what does that mean, right? That sounds a bit strange, doesn't it? Okay. Well, you don't have to understand what that exactly means, but you can see it here on the payoff matrix. Now, this payoff matrix is based on a $3,000 risk, okay, is what we suggested out to clients. So with this strategy, you can see in dollar value, if the share price goes up or down, how much you're going to win or lose. And now also, each one of these columns here is about 5 days going by. Okay, 4 days, right? That's set on 4-day increments. So what happens to the strategy over time? Okay, well, if we hold this into the end of the month and it just purely goes sideways, we make $350. So can you see here that I'm making money from time as well as downward movement? So the slower it moves down, the more money I make. If it snaps down to around sort of 430 to 419, so it's 430 to 420, which is roughly support. Okay, 421 support down here. Okay, if it gets down near that support level, my $3,000 risk, I'm going to make around $1,200. But if that happens in 4 weeks' time, I make $1,600. So many derivatives, guys, time works against you, right? They either CFDs, they charge you an interest rate, mini warrants, they charge you an interest rate. Options are the only product out there where you can actually make money from time. Okay, can work the other way, depending on whether you know the strategies and how to do it. Okay, so this is the unique thing about options, and this is why we love them, right? Is because we can use this in our favor. There's so many different strategies we can build where time is working for us. So if the market's moving slowly, okay, which typically in a lot of bullish markets it does, then we've got that extra added advantage that you wouldn't get out of a CFD or a mini warrant or buying the stock itself. Okay. All right. So basically, with this trade, and we're in this trade right now. So I'm just going to bring up my platform. Okay. Just give me a second. I'm going to bring up IAG. All right. You can see here it's moved further in our direction. So this is the day we got in here. Okay. And you can see that we've had a bit more movement down. We've taken an order today, guys, at 40 cents. All right. So we got in for 30. And you know that if we get filled on that at the contracts we suggested, that'd be about $1,000 profit in a matter of 3 days down. Okay. And a percentage move on the stock, okay, was 6%, okay, to the lows of today. All right. So this trade's working in our favor right now. We're just now trying to get filled in the market. We probably just need as I said before, we're going to need it down near 430 or 420 to get filled. Okay. So if it runs back down there again, all right, we'll get done today or tomorrow. All right. So momentum's down, but it's time to get out, guys. Our indicators are saying it's a bit oversold now. We're very close to support. So it's time to get out. All right. So look, guys, that sort of just takes you briefly, without detail, through a process. Okay. What did I just show you? We had a technical reason to get into the trade. Okay. So we used technical analysis. I had a fundamental reason to do the trade as well, which makes me even more confident when I get in. And then we chose a strategy based on the cookbook. Step by step, it tells us how to set that strategy up. We can build a matrix. Okay, we've got a tool, an option calculator that builds that matrix that I showed you, and it tells you dollar value, P&L, depending on the share price movement. Okay. So the other thing that I didn't mention before, which is important, guys, and I'll just quickly bring that back up again, is the stop. Okay, so we'd also pre-choose a stop, which was around about 470. Okay, so we went back above 470, we're going to lose anywhere between $500 to $700, and that loss actually drops a touch if we get out quickly near 470. You can see here it goes down to about $600. So they're the odds I'm looking for, right? If it goes down to support, I can make anywhere after 1600, but if I close out quickly enough, right, I might only lose 600. Okay, so you know that's how trading rules work. That's how a methodology works, guys. Right? That's how this all comes together. I know I'm going to have some winning trades and some losing trades. If I can keep my losing trades down to a minimum loss of $600 or something like that, and take profits above 1,000, okay, I'm going to make money, aren't I? Right? And that's how trading works, guys. You are not going to get every trade right. If anyone tells you they've got a 100% winning rate, they're full of it. Right? No one does. Okay, you can't get every trade or every investment right. It's about getting more right than wrong over a period of time, and it's all about trade management after that. Okay, if you don't close your trades when you should, if you don't follow our rules and close when you should, you're going to let your losses blow out, and that's why the rules are so important. You got to stick to them. Okay, all right. So let's get into the market, guys. Look, I've just wanted to demonstrate a process. That's the process we use. Let's just get started with the market now. So I'm going to start with the XJO. Now, you might have heard of this or not, I don't know, but this is the index of the top 200 stocks of our market. Okay. You can use the XAO, which is the All Ordinaries. You would have heard that on the news. People talk about that all the time. The All Ords, only real difference is the amount of stocks that are included. Okay, we use the XJO or the S&P 200. Reason why we do that is purely because it's tradable, right? I can trade this using options and mini warrants. Okay, so that's why it's important. We use this index over others because we can actually trade a view. I actually do a bulk amount of my trading on this. Okay. All right. So let's get into this for a second. Just going to clear off some of these lines. Just bear with me. That's better. Okay. So anytime that I'm going to start trading any instrument, okay, it doesn't matter what I'm looking at, I'm always going to flick out and have a look at what's happening in the long term. What I want to ascertain is what's the most recent trend. Is it up, down, or sideways? That's the first thing I'm going to look at here. And you can see here, there's a bit of a trend through here. Okay. But that trend is starting to show signs of ending, isn't it? Right. Because you got higher peaks. What's the trend again, guys? Higher peaks, higher troughs, higher peaks, higher troughs. Guess what? We've got a lower trough here. All right. Lower peak. First alarm sign, alarm bell that the trend could be changing. All right. Now, don't forget, I said could be. All right. This is not a downtrend just yet. It's close, but it's not yet. It could be just a slight change to the uptrend. And we've seen this often happen, okay, where it's just changing the angle of the trend. And eventually we might be drawing something like this because that was a very steep trend. All right. The steeper the trend, the least amount of time it's going to last, right? Okay. If it's a shallower trend, that trend should last a lot longer. So that was getting too steep, guys. We had to have a correction, right? And that correction's happened. We had a 10% correction here, right? Now the question is this going to be the start of an uptrend again? Way too early to tell. Okay. So for now, I'm ignoring this. It's not relevant, is it? Okay. None of those lines are relevant to me right now. So I'm going to zoom in. So see what I've done there. I've started out about 2 or 3 years. Look to see if there's anything relevant. If there is something relevant, I'll leave the line in. If it's not relevant, I'm going to zoom in. Now, what's happening? All right, what's happening in the sort of shorter term here? Well, let's just get some support and resistance levels in, and we'll see. All right, so I've definitely got a clear resistance all the way up here. All right, about 7,600. That's the all-time high for our market, and that'd be the first level I'll draw in. The other evident level to draw in right now is obviously 68 because that's the bottom extremity of the range that this has traded in over the last year. So we've got 68 as a clear support in the range, and then 76. So what's our market doing? It's a bit more range bound. Okay, it's a bit more range bound with a downward momentum. All right, so a little bit of a downtrend here. You got lower peaks, okay, lower troughs. So that's the next thing I want to be drawing in here. Okay, so I want to sort of draw in what's obvious, right? So we've got in the medium term, okay, we've got a bit of a channel forming. In the short term, we've got a bit of a potential downtrend happening here. Okay, what level in the very, very short term haven't we been able to get back above? Okay, well, obviously, it's a key level here. How many touch points? One, you almost count those. 2, 3, and a bunch of short-term touch points through here. Okay, so roughly 7160, 7200, thereabouts. Okay, the market has a bit of a resistance now. Okay, it took a while to break below it. All right, so if I go back in time, all right, you can see through this period of time that was the key level. It could not get below that level. It tried. The market went sideways for 6 months above this level. It finally broke below it. We had our correction. Okay, the market shot back above it again. Okay, because most corrections you actually see a buyback up of at least half of that, which is what happened. You had roughly sort of 10% there, and then another 6% back up. We failed at the moving averages. You can see we've got all the moving averages crossing over there. We failed, and now we're back below that level, and we're stuck. Okay, so where do we think the market's going to go? Right, it's very hard to tell right now, isn't it? All right, we're what we call a pivot point. All right, if the market breaks back above this level and starts holding as support again, I'll become very bullish. Right, especially if we can get above the 200-day moving average. If it fails here, okay, and comes down and breaks 6,800, we're in the technical bear market. Okay, so we're at a bit of a pivot point in our market right now. If things keep escalating in Russia and Ukraine, if Russia makes it to other borders of NATO countries, I think there's going to be a lot more fear in this market, and we could see a break of 68, which will put us in bear market territory. If that happens, guys, that is a massive warning sign for further downward movement. Okay, the market could continue to fall all the way back down to 6,000 or something like that. Okay, so that's why I call this a pivot point, because if 68 gets taken out, technically the market's bearish. Okay, and we expect further downward movement. If the market breaks back above these moving averages, then you can probably see another all-time high easily this year. All right. So we're in uncertain times right now. Technically, I don't even need to know that there's something going on in Russia and Ukraine to tell you we're in uncertain times, because technically the market's in uncertain times. Does that make sense? And that's the thing with technical analysis, right? If you know how to read the chart properly, and you've been doing this if you do this for a year or two, you will know that the market is worried about something. You can tell by the type of movement. If you see a trend like this, you can see that the market's not really that worried. Okay, it's confident. There's a confident bull market. When the market starts going sideways like this, you know the confidence is starting to dry out. And when you start seeing a movement like this, the market's really worried about something. Okay, now the fact that we haven't been able to get back above the 200-day moving average tells me we're still worried about something, and this is a massive warning sign for me. Okay. So I don't even need to read the news and know something's up. Okay. That's the thing. Now, S&P 500, which is the top 500 stocks of the US market, same thing, right? Roaring uptrend. The trend went sideways for a period of time, and now we got lower peaks and lower troughs. At the lows of that day, guys, the US market was in a technical bear market. It didn't last long enough for me to call it that. Okay. But it was in a technical bear market for a very short period of time there. Okay. If it goes back down below this level, I will be calling it a bear market. And as I said before, we could see a fair bit of downward movement. Now, I'm a bigger believer that that could happen in the US more so than for our market. Although we'll follow them down, they will probably fall more than us. Now, why would I say that? Is because that was before COVID, right? This level here at 33.58. Okay. That was the drop of COVID. And have a look at where they are now. They went up almost 100%, guys. Okay. From the lows of COVID. 100% from the lows of COVID is the S&P 500. They went up 40-odd% from pre-COVID levels. The all-time high created before COVID, up 40%. At some point, people need to take profit, guys. And what better excuse than a war? All right. So we could see a bear market, but once again, it's a pivot point, right? I won't trade that until I get proof on the chart. And this is why rules are important, because if I just went on that view, right? Because I can spin the view in any way I want. I could easily spin it to a bullish view, right? I could spin any of the garbage news that we read out there, guys, to being bullish or bearish, right? And this is the importance of technical analysis. I do not trade my view unless my technicals back me up. All right. So I can have any view I want. It does not matter because I don't get in unless my rules fit. Okay. So that's the key message here, guys. All right. So we can establish views, but we don't trade them unless the rules line up perfectly. All right. So that's the indices. That's where I start informing a view of the market. I want to know what the mood is out there, and it's uncertain. Okay. We're at pivot points. It could go either way in the short term. We're not in a clear trend. Now, there's different strategies that are more suitable for different types of markets. Now, when we're in a bull market here, obvious or not, guys, what strategies would we be using? Well, we would be using bullish strategies, okay? And because there's so much confidence in that view and there's such a nice, steady, strong uptrend, well, I'd be using fairly leveraged bullish strategies in that environment. As the environment started to change and we started to whip around sideways, I started leaning more on the sideways strategies, okay? And we did very well out of those sideways strategies going through November through to January until the market got super volatile, right? So we're always shifting the strategies depending on what we're seeing on the chart. And that's what we will teach you through the courses, okay? It sounds complicated, but it's not. It actually isn't that complicated, guys, right? I learned this knowing nothing about markets. I was running 2 fast food outlets, nothing to do with finance, 11 years ago, And now I'm sitting here as a full-time trader, teaching people how to trade and helping people. Okay. So you can learn this stuff, guys, right? The good thing about the way Carlo teaches is he takes something complex and he can simplify it down for the everyday person. Okay. All right, so let's flick through some stocks. Please use the chat box now if there's a particular stock you want me to go have a look at. Otherwise, I'm just going to flick through some that was suggested to me earlier today. So AZJ is one of them. Okay, so this is a transport company, typically transports coal in Australia, and at the moment, it's going sideways, isn't it? Right. So as I said before, what's the first thing we do? We zoom out and we look for the current trend. The trend's been down for a period of time there. You can see that, what fits, right? Well, kind of looks like this sort of, well, this was the obvious trend at one period of time. Okay. And then now that trend seems to be shallowing, right? This stock seems to be bottoming, isn't it? Right. It's spent a lot of time really not moving away. So if I look at that clear, strong downtrend, I start zooming in short term, it's starting to channel more and be just a little bit more whippy. Okay. So it's just whipping around quite a bit. So what's relevant to me right now? Well, is it that downtrend? Probably not. Is it this potential of an uptrend through here? Yeah, maybe. This could be the turning point. Okay. So that's fairly important. So I've got some higher peaks and higher troughs. Also got a bit of a channel. Okay, it's been a little bit of time below that channel, but seems to be happy back above that support level again. I've got a typical bullish signal today. Okay, so it's got some short-term selling. Market, this stock's looking a bit oversold. Okay, looking at my indicators right now, and it is having a go at trying to get back above some of these moving averages. So looking at these technicals for me, it looks like they're going to try and drive it back up again, and then it's going to find that probably some resistance pretty quickly at 371. So if I wanted to trade this back up a little bit, then I'm going to have to get in and out of this fairly quickly. Okay. So there's two things I would look at. Okay. One is a mini warrant, which I can just trade the straight upward movement. Stock, you could trade the direct stock. If you're going to trade the stock, well, there's about a 3% movement to resistance, guys. Okay. That means if you put, $1,000, okay, you're going to make, 30, right? So it's not going to be huge, right? So what you've got to do here, guys, is go, oh, well, what type of bank do I have? And how big a trading, how much risk do I want on the market, right? It's cash flow, right? This is the other big thing is cash flow. And this is why I like using leverage, guys, okay? Because if I put $1,000 on the stock, as I said before, a 3% movement is going to give me $30. By the time I pay costs and all that sort of stuff, I'm not going to make a whole lot out of that trade, am I? Right? But if I go across and have a look at a mini warrant or an options trade, which I'll quickly show you now, it's easy to do, right? It's easier than you think, guys. You just need to be taught the process of how to do it. We build tools to help, people save time. Okay. So AZJ, I simply come in and I find what mini warrants are available. Mini warrants have stops, and we need to worry about that when we're choosing our strike. So I want to have a stop at a level where I'm not going to get stopped out. If I'm going to close the trade, it's going to be me closing it, not them, right? So I want to pick a stop that's far enough away. 306, I'm going to be out way before that, guys. Okay. So if I'm going to pick a stop here, what am I going to pick? Well, at what point am I proven wrong? All right, if it breaks below 340, well, I'm proven wrong, aren't I? Right. So I'll probably be using something around 340 as a stop. All right. So let's build this trade. AZJ KOA. Right. That's the code. Right, simple as that. Come down here. I need to go grab the price of this particular mini warrant. The easy way of doing that, okay, is just putting the price in above. So 358 is the current share price. All right. So I come up here. All right. The price of that mini warrant is going to be about 80 cents. Okay. So simply go in, put 80 cents in here. I then pick my risk amount. Okay. So if I want to do 1,000, right, dollars risk, right, then simply put that in. Change that to $sign. Okay. So the resistance level I said before, guys, was 372. Okay. Now my $1,000 risk at 372. Instead of making $30, I'm making $180. Okay, pretty big difference, guys. Yeah, pretty big difference. From a percentage point of view, that's about 17%. All right, 17%. Big difference to 3%, isn't it? That's leverage, right? That's the definition of leverage, just there. Okay, if you don't understand what leverage is. What you got to watch out with leverage is, though, if you're wrong, okay, you're going to lose money, and you're going to lose it a lot quicker than what you would if you just owned the stock. And this is the big thing that people don't want to talk about, right? Now, derivatives, okay, they're great if you respect them. You need to know what you're doing. Don't just because I've shown you how to find a mini warrant, go trade them, guys, right? If you do, you will probably lose money, right? But if you follow a set of rules, if you know where to place your stops, if you've got a consistent approach, then you're going to have a much, much easier time with the market, okay? Nothing's guaranteed in this world. I can't guarantee you success, guys. No one can, okay? That comes to you as well and how disciplined you're going to be. It comes down to market conditions, okay? So there's all sorts of things that can happen, right? So I can't guarantee success. But guys, like if you go out there by yourself right now, try and trade derivatives, you're probably going to lose money, right? That's just the reality. You've got to get educated. You've got to have a set of rules. You've got to have a consistent approach. Go paper trade for a while. Don't just go straight out there and give it a go, guys, right? Don't just go try and read books and apply it because books don't give you rules, okay? Books give you knowledge. They don't give you a practical approach. We're going to give you both, right? And that's the importance here. So, look, is this trade doable? Absolutely. Okay. And you can beef this up and depending on your risk tolerance and stuff like that. But absolutely, you can do this trade. Like that completely makes sense to me. That's one way of trading it. Okay. You're picking up about 17% profit to resistance levels. The other thing we can trade is what we call options. Okay. So I can come in here now and go, okay, well, let's build an option strategy. All right. So AZJ, pretty sure you can still trade options here. Yep. Okay, so I'm not going to go through how I'm doing this or what I'm doing, guys, right? But essentially, I'm just going to go long this stock and I'm going to choose a strategy to do that. Now, one strategy I can do is a time decay trade. I'm just going to see how this prices up. I'm going to do what we call a bull put spread. Sorry, picked the wrong side. Give me a second there. I'm going to do a bull put spread. That way, if the stock ends up going sideways at support, I can just simply make money out of that. And this is I'm demonstrating what can be done, right? Don't expect you to understand this, walk away and have any understanding of this, guys. I want you to see what can be done and what you can be taught to do, right? I learned this stuff knowing nothing about finance. I knew nothing about markets. I'd never traded in my life. I'd never even bought a stock in my life. And I came and learned this straight away. I actually put my first options trade on before I put my first stock trade on, believe it or not. I started trading options for about a year before I even bought a stock. Okay. It's not that hard to learn, guys. If I can learn it, anyone can. All right. So, without going into too much detail here, guys, because I understand that it's going to get pretty confusing. So essentially, guys, I can do a trade where the market's going to give me money to open the trade. There's going to be margin involved. I've got to worry about that, obviously. Okay. For this particular trade, I'm going to get $1,500 from the market. The goal is to get these options to expire worthless. Okay. You're not going to understand that, right? If you've ever traded options, you will. If you haven't, you won't because you haven't been taught it yet. But all you have to focus on really is what this payoff matrix is going to show us. Now, what's this showing us, guys? Okay. It shows me if the share price goes up, I make money. If the share price goes down, I lose money. If the share price goes sideways, I make money. If the share price drops a little bit and goes sideways, I make money. If it drops a little bit today, I lose. I lose if it happens in 2 days' time, 4 days, 6 days, 8 days. Then all of a sudden, 10 days onwards, when we get close to expiry day, expiry is the 17th of March, by the way, I make money. Okay. So what's that telling me? All right. If it stays above 351 on expiry day, I make $1,500, which is the maximum I can make on that trade. Don't need to know the functionality. Don't need to understand options. All I need to do is understand this matrix. Now, if I make the movement bigger, if the stock falls enough, How much am I going to lose? No more than 4 grand. So I've got a limited loss, limited profit, but I can make money from sideways. That's pretty cool, isn't it? Right? There's no other financial product that you can do this, right? There isn't. It doesn't exist. And it's not that hard to do this, guys. It really isn't. Just follow some instructions. You saw how quickly I built that strategy. Okay, now I've been doing this for a long time, but you can get to that point pretty quickly, right? So let's have a look at what this looks like on the chart. So basically, guys, okay, if the stock runs to 371, okay, if that happens tomorrow, let's just say it launches up there, I make $1,200 out of a 4 grand risk, okay? $1,200 out of a 4 grand risk. That's 30%. Right? In the other strategy, the mini warrant strategy, I would have made 17%. All right, big difference, isn't there? Okay, so I make more money out of this. Okay, but also going to lose more if I'm wrong. All right, just keep that in mind. The other cool thing, guys, if it goes dead sideways, let's just say the stock doesn't do anything. Let's say it does one of these movements and it just whips around. Okay, it doesn't go anywhere. It just comes straight back down and then comes back up again and just keeps playing around with these support levels through here. Okay, so you can see there's a bit of a level through here. It keeps toying around, but as long as it stays above 351, guess what? I make $1,500 in 2 weeks' time. Okay, so it's Thursday today, Thursday in 2 weeks' time. As long as it's above 351, those options disappear. Okay, I get to keep the $1,500 credit, and my margin comes back to me that I've had to pay to cover the risk of this trade. All right, pretty cool, isn't it? Right, very cool. This is what attracted me to doing the course, right? This exact strategy is what got me across the line doing this course, because I've never seen anything like it. It gives you a bit of an edge, guys, okay? It just gives you a bit of an edge to the market. Not many people know how to do this in Australia. In the US, it's different. Go look at US options. It's crazy. It's huge over there, right? Options over in the US are as big as crypto and all the other fad things that are out there, okay? Options in Australia are a bit quieter. Not many people talk about them. Okay, don't know why. I don't know why that's come about. Really, honestly, they're pretty cool as things go in the sense of trading. So, all right, let's get back to the market and look through some other stocks. So that's AZJ. I've shown you technicals. I've shown you strategy choice. I've shown you risk management. Okay, because risk management, I don't think I've actually talked about the stop on this. Let's talk about that quickly before I jump across. I would be using, okay, 344 as a stop, okay, because that is support and this little uptrend line, 344. So how much do we lose at that level? About 1,500. It's a little bit high, guys, right? What that says to me is I might have to adjust my stop just a little bit higher, all right? Or I'd go in and adjust the strategy a little bit. Not going to go there, too complicated for your level of knowledge at this point, guys. But essentially, I would then go adjust my strategy to the point where I'm okay with the risk tolerance. As I showed you before, I want to try and make more out of my profitable trades than what I'm going to lose on my losing trades. So if I'm going to hit my stop, I'm going to make sure that I'm not losing too much. I want to cap that loss at around certain levels. Okay. All right. So that's what I mean about risk management, and we'll teach you all that sort of stuff in our courses. All right. Let's keep flicking through Zip. Someone wants Zip and EOS. Okay. So let's go EOS first. Not one that I'm familiar with, guys. The first thing you're going to see here is obviously it's been downtrending for a period of time. So you can see by the movement automatically that it's probably a small cap stock. There's been a huge move up to around that $10 mark. Obviously, there must have been met with some bad news. It's pulled back, gone sideways, and now it's just tracked downward. Okay. So the main focus point over this period of time is obviously this downtrend. Okay, you can see the averages are moving down. They've all crossed over. There's a bearish signal on the moving averages as well. You got a clear bear trend in play. All right, now this bear trend right now in the very, very short term hasn't been able to get below for 174. Okay, so it's stuck at this level right now. Okay, so as the market is, this is at a bit of a pivot point. If this level breaks, I'll have the belief that this downtrend here is going to continue. If this level holds, though, this could be the start of the stock bottoming out. All right, so you can see here that's stuck between 240 and 174. If this jumps up in the coming days or weeks or months, goes through that downtrend, goes through this resistance, shows a higher peak, higher trough, I would be very, very interested in looking into this stock. Okay. If it breaks support, though, you'd be able to go short. Now, don't think you can go short using mini warrants on this stock. I think it's too much of a small. Yeah, no, it's not on the list of mini warrant stocks, and it's not an optionable stock either. So you wouldn't be able to short this stock, guys, basically, in the Australian market using a hint-based trading account. So basically, I'd be leaving this one alone at the moment. Okay, Sanswood. So thanks for suggesting it, but if it breaks lower, it's hard to trade. Okay, and if it bounces from here, well, hey, you could buy the stock. Okay, but I'd only buy it if the trend started turning to up. So I need to see a higher peak, higher trough. Okay, so I'm gonna have to see. I'll get a free draw in here. Yes, I can. Okay, so I'm going to need to bounce off this support level. I need it to form a higher peak, higher trough, and get through that resistance. Okay, so if it does that, then I'll be interested in this stock. Okay. All right, so it needs to come up through this resistance level with higher peaks, higher troughs. Then I'm interested. Okay. Obviously, there's a few other technical things I want to see. All right. Can't explain all that here. But that's the point I'd be interested in this stock. Zip, okay, that's another good one. Thank you for suggesting that. That's been through some interesting times. Z1P. Okay, so this was back in the day when buy now, pay laters were the big fad, right? You gotta love how markets go through these phases. Bit of an uptrend. It was a very, very volatile uptrend, guys. I do not like staying on stocks that do this, right? Well, gaps up, comes down, gaps up, pulls down. This stock's mental, right? It's honestly the charts at bloody dog's breakfast, right? How do you time these movements? Okay, it's not a nice steady uptrend. I showed you a nice steady uptrend on the S&P 500. This is not a nice steady uptrend. This shoots higher, shoots lower. Timing this gets very difficult, guys. Very, very difficult. You're either going to make a lot of money out of a stock like this, or you're going to lose a lot of money out of a stock like this. And you can see it via the chart, right? So this is the time in the sun. Okay, this is when it was going through that stage of being a bit of a fad. It was a new industry. There's so many players that came out into the industry and listed on the stock market. That's a conversation in itself. I'm not going to go there. I could be here for the next 20 minutes blabbing on about that. But guys, look at it now, right? It is. I can't believe how I haven't looked at this for a little while. I cannot believe how far this has come off. Okay, back down to $1.89. So technically, guys, what's it in? It's in a downtrend, okay? Which means until this downtrend breaks, until I start seeing higher peaks and higher troughs again, this stock could go lower. I'm not going to even try and predict how low this stock can go, okay? So I can start talking. I'm not going to start talking fundamentals. I'm not going to go start looking at valuations or anything like that. Why would I waste my time when the stock is in a steady downtrend? When I start digging deeper, guys, on a stock like this, if I want to buy, okay, or even trade it to the upside, is when it starts forming an uptrend again. Then I'll go, okay, the market's changed its tone on it. Maybe it's sold down to a point where it's oversold. Let's go have a closer look at some of the other information. All right. If I'm trading it, well, I could maybe trade this short. I'm not sure if you can still get many shorts on this or not. Let's have a quick look. Z1P. Oh, I'm going to have to refresh that. Sorry, this calculator doesn't like being in no use for a while. It times itself out. That's better. You do have minis on this stock. There's only one mini long left. They don't offer mini shorts on this anymore. So you can't trade the downward movement anymore on Zip. Zip used to be heavily traded, guys. There used to be heaps of mini warrants through here. I've traded this a number of times, and now it's come out of favor, right? So people are just leaving it alone. All right, so not really much else to say there. It's downtrending. Until it stops downtrending, I'm not interested. Fortescue, okay, one of my favorite stocks here, guys. Okay, Fortescue is a very volatile stock. Okay, when I trade this, I use a combination of technicals and fundamentals. Okay, once again, I never trade my fundamental view unless my technicals are lining up. What's the trend overall, guys? The trend is still up, although we've had periods of time where this trend has been accelerating. All right, so massive acceleration through there, pulled back, crazy acceleration through here. Okay, that could not be sustained. At some point, it had to pull back, which it did. Okay, as I said, these really sharp trends don't last forever. They can't. They have to correct at some point. See these massive sharp movements, correction. Another sharp movement, correction. The sharper the move, the bigger the correction. Okay, there's all these little technical things that you're going to learn along the way that's going to help your probability of success, guys. Okay, as I said, I've been doing this for 10 years, so I see a lot more on the chart than many do. Okay, so but these things come with education and time. All right. So once again, acceleration off that longer term trend down. Right, iron ore crashed last year. Okay, this is why I use a combination of fundamentals and technicals. I don't trade Fortescue unless I've got a view on iron ore. Okay, I do technical analysis on the iron ore chart. Okay, that's the other thing I like to do. I'm trading this. Now, this has sold off heavily, okay, and it broke a level of support, which is starting to look a fair bit bearish. So we've been leaving this stock alone for a while. Two reasons why it broke. One, okay, number one reason is that it's it didn't report that well. Okay, that was the thing. Out of the three big iron ore miners, BHP, Rio, and this was one of the weaker of the reports. I'm pretty sure it's gone ex-div. Has it already gone ex-div? Having a quick look, guys. Ex-div date for was Feb 28th. So it's gone ex-div, right? And that was also a contributing factor of the fall. Alrighty, so it's had its div and all that sort of thing, and now it's on its way back up again. So this isn't much of a key level. It's kind of almost feels like it's bounced from nowhere. There's a little bit of a level there. Okay. So a couple of days up, we're nearing into the 200-day moving average. That's a little bit of a warning sign. But depending on what iron ore is doing, I'd be happy to ignore that because my indicators are still very oversold. Now, what's iron ore doing today? Well, this is a chart of the iron ore futures, okay, on here. Now, that's up 8%, okay. If I click over to a daily chart, you can see iron ore futures have been extremely strong, okay. It's seen 4 days of very large movement up, okay. It's actually back up near levels closer into when it reopened after the Chinese New Year, okay. This is not, and this is where it was, and this is not priced in that movement just yet. So I don't mind this one actually. So thanks for bringing this one up. Okay, I actually quite like this. So who was it? Frank, thanks for bringing that up. So this one here wouldn't quite, no, it does actually. That's third day of the move. So it wouldn't quite fit the rules taught in the course. Okay, just a heads up. One thing it wouldn't fit, believe it or not. Now, if you're going to trade this, being such a volatile stock, you don't need to take a lot of leverage. You don't need to put a lot of risk on this. You can easily put a mini warrant on this. It's options trades you can do as well. So if you did sort of maybe a less, you go less leverage, and that's what gearing means here. Okay, lower the gear, lower the leverage. Okay, so lower the risk. You want to make sure your stop's nice and far away. All right, so $16 down here. Yep, that should be far enough away. I probably wouldn't go to 17. It's a bit too close. So KOF, all right. So it's very simple. I'm just going to show you process. Okay. The share price is 19.30. Okay. So then that gives me my prices of all my mini warrants. I can simply just choose. I might even choose this one here. I want something a little bit less leveraged again. So I'm going to choose the KCE. All right. Let's put my code in here. KCE. Right. The price of that particular mini warrant is about 13.86. And this is going to be the last one, guys, and we're going to have to start wrapping things up. Let's clock over there. Right, so if I were to put, let's call it, 120 contracts on this, okay, $1,600 risk, something around there on this trade. Now, the most recent resistance level has been back up near 21.47, okay. If it gets back up, oh, what have I done here, guys? No, I think I put something in wrong. Just give me a second. $5.44. Sorry, how did I do that? $5.44. That's better. Okay, let me fix that up. You can see right there. That's better. Share price is at 19 right now. Okay, so change the share price movement. If the share price goes all the way back up to resistance, 21.50-ish, thereabouts, okay, I'm going to make about $600 out of a $1,600 risk. All right, easy to see. All right, about $600 there. Percentage-wise, okay, that's 35%. Share price movement of 10%. So who bought the stock, okay, this quantity of stock, all right, you'd make 10%, 160, all right, or you make 578. That's what leverage is, all right. From a risk perspective, okay, you'd want to be stopping out anywhere below 1788, okay. This support level, 1760, if that support level breaks, you've got to get out of there, and the loss is going to be roughly the same. All right, it's a 10% move, so the loss will be about $500 as well. You've got to be comfortable with that. If you are, no worries, okay. All right, so I just want to quickly run through a few things before we call it a session, guys. So I hope that helps demonstrate how we approach the market. We always start off with looking at the key indices. So I'll look at the S&P 500. I'll look at the XJO, which is top 200 stocks of our market. Our market tends to follow the US market a bit, so I always keep tabs on what the US market's doing. I also personally do a little bit of trading over in the US market, so I'm always keeping tabs of that anyway. So I just want to talk a little bit more about what we do and what we offer in the way of courses, okay? So there's two blocks to our courses. One is the technical trading course, okay? Caro talked about that last week in last week's webcast, and that course is perfect for beginners. It's going to show you the technical analysis that I've been using today, all right? So you'll be able to look at a chart. You'll learn about different markets, okay? So Carlo will teach you about the different markets, different stock markets. He's going to show you charting, how to use the charting software, how to draw lines, exactly how to draw the lines, if you know what I mean, right? So it can be quite subjective how you draw lines, and we're going to teach you exactly how we do it. Okay, we're going to teach you mini warrants in that course, okay, because you're going to need at least an introduction to leverage products, and that's what that course weekend, that block does. It shows you how to pick direction, gives you a set of rules to pick direction, and it teaches you one of the most basic, easier derivatives to use, and you can go away and use that as practice. So you get the full trading rules, risk management rules, all of that around how to trade stock and mini warrants and how to pick direction. You can use those trading rules on anything, guys. It doesn't have to be mini warrants. It doesn't have to be stock. It can be currency. It can be commodities. It could be crypto. You can use the technical rules on anything, right? Okay, on any market. So technicals are technicals, guys. It doesn't matter what the product is. Technicals are technicals, okay? All right, so that's the first part of our course. That's the first block, okay? The second block of our courses is more around strategy. So once you understand how to pick direction in the market, then it all becomes about what strategy you use. And the more strategies you know, the more tools in your tool chest, the more trading you're going to do, okay? You're going to be in and out of trades a lot quicker, and you're going to have a lot more options in front of you if you do the second block, okay? Now, we're going to teach you various different option strategies using the cookbook that I showed you earlier, okay? And you walk away with a cookbook with various strategies at your disposal. So if the market's trending up strongly, you're going to have more leverage strategies that you can use that are going to maximize your profitability if you get the direction right. If the market's going sideways, okay, you're going to have strategies where you can make money out of time decay. I showed you that before, okay? In a couple of the strategies that I built in those Payoff Matrix, Okay, so you get to make money from sideways movement. Options you can actually use around reporting seasons when stocks move 10, 20%. And there's multi-directional strategies we can set up where you can make money from upward or downward movement, but you lose from sideways. So they're good for reporting, guys, right? If the stock's going to go up or down a lot, or you think that's going to happen, then you can apply a strategy to that. So it's actually pretty cool, right? It's actually fun. I really enjoy trading options. Okay, it's as much of an enjoyment thing as anything else. Okay, because it's really cool the different strategies that you get to deploy. Right, I feel like it's one of those strategy card games or something like that. Right, you've got all these different strategies you can apply. You can look at the chart and go, okay, I think it's going to go up, down, or sideways. Which strategy am I going to pick? Get my cookbook open, get my strategy calculator open, adjust a few things around, build some cool strategies, and go apply them. Right. And that's what options is about. It takes it to that next level. Not to mention, if you do have a portfolio, you can sell calls over your stock. That's called a covered call. Go Google it. Pretty cool strategy as well to help build a bit more yield in your portfolio. Okay, especially in sideways markets, guys. It's very, very good strategy. Once again, in this professional strategies block of the course, you're going to learn trading rules around each strategy. Okay, so each of the different strategy styles have slightly variated rules. Okay, so we build you up. The first block's all about technical analysis, picking direction, an introduction into a leverage product called a mini warrant. Okay. And then we build you up to a point where you come in and start using options. Understand something with options. You don't have to understand the Greeks. You don't have to understand how an options price works. We will teach you the basics of options and what options are and how they work, but it's irrelevant to being able to trade options. If you just follow the rules that we give you in the cookbook, then that's all you really need to know. Okay. So you walk away with, I'll just quickly show you. I'm pretty sure I opened it here. It is here. All right. So you get a cookbook. You got your trading rules. They're not big rules, guys. Easy to learn. Directional rules are 9 rules. Sideways rules are 5 rules. Not that hard to learn. Then, depending on how it lines up, you pick your strategy style. Okay. So I know what directional sideways. I'm going to do a bull call spread. But come in, then I find my page for bull call spreads, shows me step by step how to set the trade up, shows me how to look at analyze my risk. Okay, max profit, max loss. Where am I going to put my stop? That's all in our set of rules and our cookbooks. It's going to give you step by step process on how to trade options. Okay, so our Trade Like a Professional course includes both of those blocks. Okay, it's a 4-month program. Okay, you're going to have 4 days of live sessions face to face with Carlo. You can do it live stream if you're interstate and you don't want to come down to Victoria. We do them in our office in Melbourne. Okay, in Flinders Lane. There's 2 weekends. Okay, so that creates the 4 days of live sessions. So we do it over 2 weekends, and those 2 weekends tend to be 6 to 8 weeks apart. Okay, so you want to come to the first weekend, learn how to pick direction, go practice. You get a personal trainer. That trainer is going to be in contact with you regularly. Okay, you can call them 3 times, 4 times a day if you need to. Right, just really utilize them to make sure that you have taken in all that information on that weekend. Okay, so you get to go out and practice. You learn the theory face to face with Carlo. Then you get to go out there and practice before you come into the next weekend, where then you will be taught how to trade further strategy. Then you go out of that weekend and you go back to doing a lot of work with your personal trainer. Okay. So it's ongoing support throughout the whole course, guys. That's what it's about. You're not going to learn how to trade just by looking at theory. Right? It's just not going to happen. You can go read 20 books if you want on trading. I know a lot of people have tried it that way. It's going to take you a lot longer than 4 months to get good at trading. Okay. If you're going to do it that way, it's going to take more like 4 to 10 years. Okay. If you do it that way, this will fast track you. Okay. If you do this course, you will know more about trading, short-term options and mini warrants than most advisors that advise on stock in the Australian market. I can promise you that. We've had a lot of people in the industry actually come and do our course to learn how to trade options. All right. I, for one, I've done my certificate in finance, right? I've looked through the course modules. They don't teach this stuff. They teach you the theory, right? They teach you how the market works. They teach you how the financial world works. They don't teach you the practical step-by-step method on how to trade, okay? So a lot of professionals don't know this stuff. This course has been born by a trader, Carlo, okay, 30 years ago. These rules have been adjusted and adapted over 30 years. It's been a long time in this, okay? And the rules haven't changed much, but they do get adapted as the years roll on, okay? As part of this course, you'll get your personal trainer for 4 months. You get trade recommendation ideas. It's a really good learning tool for you guys because we'll recommend trades out to you so you can see why we've adopted that trade, how we've set it up, and why. And then you can ask questions, and that's the part of the learning experience. We do a paper trading challenge, okay, where over the period of time you can, after the first weekend, you can do a challenge on using mini warrants, and the winner in that challenge gets $1,000 worth of brokerage, okay. So it's a bit of incentive to get you out there and practice, okay, because paper trading can sometimes be a bit boring, so we want to put something on the line, okay, get you motivated. And you can go and win that as well, right? So it's all about practice. You learn the theory face to face, get out there, practice, make mistakes, muck around with it, call your trainer, go to webcasts. We do webcasts every single day, just like today. See how I spent about 20 minutes going through the market then, looking at a few different trades. And I was going pretty fast, right? Now, we do different levels of webcasts from Monday to Friday. Ben does Fridays. He does it very simplistic, very slowly, much slower than what I was doing before. And he explains everything that he's doing. Caro does Wednesdays. He focuses a bit more on options, okay? And once again, Caro goes quite slowly. It's more of an education-based webcast rather than just a trade group. I do a trade group Tuesday. We've got Jimmy doing one on Monday. We've got Sam doing one on Thursdays. My webcast, I run a little bit quicker for the more experienced people, and we're out there looking for trades. That's all we do for an hour. We spend 15 minutes at the end of my webcast going through one particular strategy, which is a side-by strategy we adopt on the XJO, okay? And because that's what makes sense in the market right now, we've been doing that week by week, okay? So there's a lot you will get out of the 4 months, right? It's not just about those 2 sessions of face-to-face with Carlo. It's everything else that comes with it that will complete the practical side of learning this, okay? We're very hands-on with you. You can come in the office, do some face-to-face sessions with your trainers, okay? Whatever it takes, because everyone learns in different ways, and we cater for all those different ways, okay? If you're happy to do live stream, you can do live stream. If you want to do face-to-face in our office, you can do that. You can come and see the trainers in our office in that 4-month period. Whatever it takes to get you to the point where you know this stuff at the end of it, and that's what we're good at, okay? All right, so how does this all work, guys? So Caro went through the technical trading course last week. It cost $19.90, okay? Now, you can just come in and do that course. As I said, the technical analysis you'll learn there can be adapted across any market, okay? So you can just come in and do that. That's a good starting point. What we try and get people to do is do both blocks at the same time, okay? And there's a massive incentive in that. And the reason why we do that is we believe that options should be part of your trading chest, right? It should be part of your tools that you understand. Options are really cool, guys. They're nothing like any other financial product you're going to find out there. I believe personally that it gives you a much bigger edge to the market because you're going to find more ideas. You're going to have more flexibility. And you're going to find a trading style that better suits you, okay? Some people just use one option strategy, and if the market doesn't line up for it, they don't trade, right? Other people use all the option strategies and adapt it to whatever the market's doing. And this is the cool thing about options, right? You'll find your little niche, okay, on how you're going to use them as time goes on. Now, if you come in and do TA and decide to do the professional strategies, the options in a year's time, then you're going to be paying $19.90 for the TA and $2,985 for the options, okay? So if you're paying separately, it comes to $4,975. As an incentive, okay, to get you guys to do the full 4-month Trade Like a Professional course, which is both blocks, we're going to give you $1,485 off that price. So you're going to get it for $3,490, which is a pretty good deal, Okay, that's 29% off, guys. Okay, basically the full investment, we can break that up over 3 payments if that works for you. We're fairly flexible on how you want to do that. And basically the next session dates is the 2nd and 3rd of April for the first block, or the 4th or 5th of June for the second block. Okay, now if those dates don't work for you, that's also okay, right? Because there's other dates there that we can look at, and we can mix and match the dates around a little bit, right? If I put all the dates in here, it's going to get confusing. But if you want to know the other dates, these are the up and coming dates. Okay, we've got more for the rest of the year that you can have a look at as well. All right. So just give us a call. All right. You can give Jared a call. You can give anyone on the desk a call, and we can run through the dates with you pretty easily. Okay. So it's 3,490. As I was saying before, that is two-day workshops. So that's the dates that I've got there. That's one of the 2-day workshops. That's the other of the 2-day workshops. Overall, it becomes a 4-month course. You get 4 months of online training. Okay, so you're going to have a personal trainer for those 4 months. You're going to be able to talk to that person on a daily basis, multiple times a day, whatever you need. Okay, that trainer is there, sitting there waiting for your phone call every day. 4 months of trade suggestions. Okay, so that's going to help you along in your education and see us put trades together that fits the rules that you've been taught in the course. You get to go look at those trades, and it helps pencil everything together. Then you also get 4 months access to Iris, which I was using before, is our trading platform of choice. Okay, that gives you your charting, it gives you your watch list. You'll also get access to the mini warrant calculator that I showed you before, and then also access to the options calculator that I showed you before. There's pre-recorded videos on all the content that you get taught through the courses as well. So if you want to sit back down and listen to the content again, taught by Caro rather than Carlo in a slightly different way, there's other ways of digesting the content. So you can hear it time and time again. So I know myself, I need to hear something 3 times before it sinks in, right? And then we give you that through our membership as well. All right. Now, have a think about that, guys. Look, you can't, like I said, I came through and did this 10 years ago, right? I did the full trade like a professional course. Okay. Outlaid, I think it was actually more expensive back then. We've dropped the price a bit since back then, guys. Okay. I think from memory, I paid like $6,000 to come and do the course. Okay. So this is very, very cheap in comparison. For a 4-month course, the investment's very, very good, guys. Okay. There's a lot of resources and trainers and things that go into this. So this is a very, very good price. Okay. This is where I started. 10 years later, guys, I'm sitting here running the trading desk. Okay. So if you apply yourself through this course and you continue to go out there and practice after the 4 months, you will know a lot about trading the markets, guys. And this can be used on the Australian market, on the US market. Our rules can be adjusted across to many, many different marketplaces. Okay, so you're going to know a lot about trading. Okay, and that just grows over time. The more you trade, the more you learn. Okay, as time goes on. If you're already an experienced trader, if you know a little bit more already about things and you just want help, we also provide that. You don't have to come and do a course to get involved with us. So if you are an experienced trader, then feel free to come in and just give me a ring, give one of the guys a call on the desk, and have a chat about opening up an account, just doing some trading with us. Okay. Okay, so Frank's just asking a question. Frank, give Jared or Caro a call, please, and just ask those questions, mate. I don't know the answer to that question off the top of my head. All right, so give Frank, in your situation, just give Caro or Jared a call, mate. All right, so guys, is there any other questions? Don't forget, we're here to help. All right, if you want to learn how to trade, we're one of your best starting points. Okay. There's not many other companies out there in Australia that teach rules around short-term trading like this. Okay. Especially ones that will give the level of support that we give. Okay. We've got a team of 6 advisors sitting around the desk, ready, waiting for your phone calls. Okay. We're not low touch, we're very high touch. You're welcome to come into the office and sit down with one of our trainers if you're a member and talk through your trading. We're happy to help you out. That's what we're about. All right, so give it another couple of minutes. If there's any other questions, please shoot them through now. Otherwise, I've gone very well over time. So I hope you enjoyed it regardless. I know it was a bit of a long session. Honestly, could sit here for the next hour again talking about the markets, but I know most of you need to get back to your daily lives and work and the rest of it. I'm not seeing any other questions come through on the chat box, guys. If you do think of anything, just send us an email, advisors@tradercircle.com.au, and one of us will get back to you straight away. Okay. So thanks for attending today, guys. Okay. I hope that was helpful. I hope this two-part webcast gives you a bit of a starting point on knowing what's out there and what you need to learn over time to become a successful trader, whether it's with us or anyone else. Just get out there and learn a set of rules, guys. You've got to have a consistent approach. Don't go trading derivatives and leverage products without a consistent, proven set of rules. That's my message to you. All right. Love yous and leave yous. Have a good day. Bye for now.